How'd I come up with the strategy? Years and years of working in general in data mining. So early on, I started researching the CME group and how they control the market on the Globex and how the tracking algorithms work, how the gapping algorithms work, the IOP, velocity logic, price banding, all of that, margin requirements, CME span. I started reading patents the CME group put out so I can actually decode the Globex and figure out all the autopilot systems on it, how everything works. And I came up with so many trade ideas just by doing that. CME group patents their stuff, like this is what we do on the market. And I was looking at that and saying, I can make trade ideas out of this. This is great. So that took me down a whole path to create a lot of the things like risk intervals, CD bands, yellow lines, red lines, all the stuff you see on my screen come from my research at just reading everything the CME group ever published. This is like engineering nerd level Matt that likes to read technical papers. And I read hundreds of things, literally hundreds of things over the course of 15 years. And so that started that. And then I had another person in the old community before we even built Rocket Scooter that was an options trader. And he was telling me all about options. He's like, options are great. They have all this information, and options are the math equation that people use to price options based on the probability they expire in the money using all kind of factors like time and volatility. And I was like, wait, there's an equation that is the math of the supply and demand of the options and gives an adequate price. And he's like, yeah, like options are priced based on Black-Scholes such that at any particular point in price, there's a 50-50 chance that the options buyer and seller have of winning. So no one side has the advantage at all times. The option is repriced based on the probability. And I was like, say that again. He told me all of that. And I was like, so you're telling me this equation, I could use options math to predict volume flow. And that's the first, my brain immediately was listening to what he was saying. And that's immediately what I said. I was like, if this math is pricing options based on probability, then I can calculate the hedging against those options based on that same math. And I can predict volume flow based on that probability trying to shift itself back to that neutrality. And he's like, yeah, they peg options on the risk-free rate. And I was like, I think I'm going to break the stock market. How come nobody's done this before? He's like, it's really hard to understand which options mean something. There's millions of options out there. But I was like, no, I think I can write an equation to pull out options that are meaningful, options that are hedged. I can just tandem watch multiple markets at once and try to find options that are hedged. Those are the ones that have meaning. Those are the ones that we hedged against. And I went to the drawing board and I came up with all of these things I'm talking about now. As I heard him saying this, I was immediately, my brain just goes, options are like a packet of valuable information where I can predict volume. And immediately it was like, I can predict volume with this. This is ridiculous. Has nobody doing this? And now I think about, why is nobody doing this? Well, like, pay attention to Twitter. People in the stock market and people that trade are fucking idiots. This is why nobody's done this. I found out recently. That's kind of what I thought. And that's the story I really have, because in all honesty, it was a brainstorm that I was like,